Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, September 3rd, 2019. I am Frank Ochoa, aka PivotBoss. Welcome to the new month of trading, the new week of trading as well. It is first trading day of the month, and you can see here we have new pivot range for the month. These three lines represent the pivot range for the new month. It is lower than the previous month, but price closed above this forecasted pivot range at the time. And so what that suggests is that this market could be a little bit more bullish at the moment, the way it finished the month, but continues to show rejection here at major key levels. The 2940 to 2960 zone continues to be a significant area of overhead resistance, and I've mentioned each time that when we've gotten above the previous week's high, we've fallen right back down. We'll get above it, fall back down. Here we got above it, and now we're already pulling back here to begin the new week. And so for the most part, again, this 2940 is just a significant area of resistance. Very difficult right now to penetrate through that zone, and after hitting its head so many times at this zone, at some point these longs will become exhausted, and that's when a long liquidation may occur. So again, this is going to be a very important zone to continue to watch. This month, if it fails to hold this midpoint here, that's the midpoint of the previous month's range, that right there will suggest a decline back down. So something to keep an eye on as price continues to battle around this zone here. All right, let's take a look here at the NQ. You'll notice with the NQ, very similar price action. With the ES, it actually took out recent highs, whereas the NQ came just short of these highs here and has done so each and every time. But 7,800 continues to be the key level of resistance here. 7,800 here, 7,850 up above continues to provide resistance as well. So that zone right there in general is very similar to that 2940 to 2960 zone in the ES. And again, after several attempts of not being able to get through that zone, that's when you may begin to see a flush to the downside as we take out recent lows and perhaps try again. So this is going to be something to keep an eye on this month. The other thing to note about these 2 months is that the price range was relatively narrow for the most part. The top of August does come in up here, so the range was wider. So that's why you have a little bit of a wider, not super wide, but you have a narrow pivot range, but it's not so narrow as last month. But again, this compression here, if we had an entire month of compression, September bodes well to see an entire month of expansion, whether it's to the upside or whether we do break down. So again, September could be pretty significant given how quiet and steady August was. So the last point to be made on those two indexes. Over here, if you take a look at crude oil now, you'll notice that with crude oil, prices are trending lower this morning already, down 2.3%. You can see again, we've talked about the 57 level. 57 has been very clear resistance. Price got very close to it here again, rejected it here, and at the beginning of August. Each time it is sold off tremendously back toward 54s. We're right now just below the 54 level. But one thing to keep in mind with crude oil, and I mentioned this last week, but I'll refresh, is that we're compressing significantly here. We've compressed for 2 to 3 months, and additionally, we're coming into the part of the year where you tend to see seasonality-based selling pressure. And so, typically speaking, if you bring up a seasonality chart of crude oil, you'll see from about the last week of September to the first week of October, you see generally bearish trending activity out of this index. So again, this is going to be very important to watch later on, because after this compression phase, it could be gearing up to break sometime in the next few weeks, and if it does, it could be months long of trending behavior. So that could be something to keep an eye on as we head into the end of the month. For right now, price is holding just below the 54s. Again, it's going to likely continue to chop around this zone here. It really has held okay above the 54 zone for the most part, even if it has gotten below it, 53. But right now it's mostly in this kind of range bound chop, so it wouldn't surprise me if we kind of reject down and come back and continue to build out as we head into a break. But it's very clear the upper trend lines remain intact, and price continues to form lower highs, which suggests more weakness ahead. All right, lastly, taking a look at gold futures. Gold has been trending higher very nicely. The last time we had it as a narrow 4-day range breakout right here for a shot at seeing 1565. We hit it right on the button, and now we've pulled back here since that high. So we're pulling back over the last 5 days. One thing you'll notice right here is that price has been inside the PEMA trigger zone. The PEMA trigger zone is where you want to buy the dips in an uptrending market, and that's exactly where it's building up again, right in the zone. I mentioned before, if price got below 1525 and as deep as 1520, that could provide the best buying opportunity for a continuation toward 1585. So 1585 would be the next target. We did get close to that zone here. The low was 1526.60, so we got very close to it on Friday and already kind of bouncing a little bit now. We may still need a day or so to kind of drop down and hit the pivot range and then go something like this back here, or any of these pivot ranges that have been hit. Doesn't necessarily have to, but overall, if we did get that push down into that zone, that could be a great buy for a continuation into 1585. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you soon. Take care.